then, rising imports of Sri Lankan pepper are turning up the heat on domestic pepper prices. Traders say that the influx has hit rates in the Kochi terminal market, with ungarbled pepper now quoting at 695 rupees per kg and garbled variables at about 715 rupees per kg, which is a slide from the year's peak of 721. Meanwhile, Sri Lankan pepper is making its way into consuming markets at a more competitive price in the range of 675 to 690 rupees per kg, creating pressure on local producers and dampening the pepper's rally. The price gap is now raising concerns within the domestic pepper trade. To discuss this further, we now have Mr. Kishore Shamji Kuruwa, Director at India Pepper and Spice Trade Association, now joining us. Mr. Kuruwa, thank you so much for taking your time out and joining us. Reports suggest rising imports of Sri Lankan pepper have hit prices in the domestic market. Help us understand, are these reports true, and how much have prices fallen by in the domestic market consequently?
Yeah, last 3 weeks it has fallen down by 39 rupees a kg, 3,900 rupees a quintal. 3 weeks, week 19, 18 and 17.
Okay, so prices have indeed fallen in the domestic market, but do you expect the menace of surging Sri Lankan pepper to continue in the foreseeable future? And by when do you expect the prices in the domestic market to finally recover?
That being the 1,700 tons have come in March also. So more pepper, imported pepper coming into the market, and the new harvesting started. It was Karnataka people were holding back, anticipating market to touch 8,001, 8,800 rupees a kg or 1,000 rupees a kg, which has not happened. And now Tamil Nadu farmers are in a hurry to sell. Kerala farmers have already marketed because some of the area in Kerala had a better crop, though overall production was reported all India basis 75,000 tons by the DAD, Department of the Agriculture Director, Kerala, who is looking after the all India crops estimate through a app, and they suggest their estimate was 75,000 tons and 50,000 tons carry forward. But the imports have upsided everything. And government of India is earning 8% duty per kilo on 500 rupees kilo basis and good income. March itself they earn nearly 5 crores and more. Each month 3 to 4, 5 average like it is going on. So good income for the central government every month without doing anything on imports. And the local farmers are suffering now because of the Indo-Sri Lankan pact we have, and we can't change it also. Only we can curb by putting some minimum import price and all that. Now even that price, when the local prices are hovering around 685, 690 per kg, it is available in the consuming market 675, 650. Some of the importers have seen importing at even below 500 rupees also, while it is 500 rupees is mandatory for domestic demand, for domestic market.
Understood. We get that point. So rising imports from Sri Lanka are clearly impacting domestic farmers. But Mr. Kuruwa, can you help us understand, are masala producers preferring cheap pepper that is coming into India from Sri Lanka, and how much of this will impact the domestic industry?
Domestic market is being totally overburdened by these importers. They have imported much more than what they can handle. And now they are in a mood to liquidate, and there is a rush to sell, and which is in turn influencing the local farmers also to sell their produce. And that is how the prices are continuously last 3 weeks on a declining mode. It was down by nearly 14 rupees last week, 19th. The week 18, it was 17 rupees per kilo down. And week 17, it was 8 rupees down. So 39 rupees a kilo prices have gone down for the past 3 weeks. And even now, people are a bit confused what will happen. In between, this war-like scenario came in, which further influenced buyers to keep away. In a declining market, naturally the buyers will hold back. And the local farmers will also have to hold back. And the local farmers will also have to hold back. And the local farmers will also have to hold back. And the local farmers will also have to hold back. And the local farmers will also have to hold back. And the local farmers will also have to hold back. And the local farmers will also have to hold back. And the local farmers will also have to hold back. And the local farmers will also have to hold back. And the local farmers will also have to hold back. And the local farmers will also have to hold back. And the local farmers will also have to hold back. And the local farmers will also have to hold back. And the local farmers will also have to hold back. And the local farmers will also have to hold back. And the local farmers will also have to hold back. And the local farmers will also have to hold back. And the local farmers will also have to hold back. And the local farmers will also have to hold back. And the local farmers will also have to hold back. And the local farmers will also have to hold back. And the local farmers will also have to hold back. And the lo which will add pressure on the sellers. And that is what actually happening. The market forces of buying and selling when a rising market and a declining market, what normally happens. That is what we are seeing in pepper market now. But somehow if we import it by June, again Sri Lanka will be ready with its next crop, 2025. And Vietnam is struggling because China is not buying. Last year they didn't buy much of the pepper. This year hardly 13,000 tons or 16,000 tons they have bought. Normally 2 years back they bought 65,000 equivalent to US imports from Vietnam. But that it is reported now that when the prices were below $4,000 a level, China overbought for the last 2 years those prices, 65,000 tons each year, 23 and 2022 from Vietnam. So they have kept away from the market in 24. They are keeping away from the market 25 also, which is adding pressure on Vietnam.
Understood. So global demand supply dynamics is expected to impact prices going forward in the global market. But shifting focus back to India then, Mr. Kuruwa, how is production shaping us this year, and help us understand how much production how much pepper did India produce last year and how much is it expected to shape up this year?
So 2025, as I said, the Director of Agriculture Department has said that we will be having 75,000 tons crop for 2025 for India. That is Kerala, Tamil Nadu, Karnataka and Andhra. And they have also estimated 50,000 tons carry forward stocks available and 20,000 tons imports available. So all put together availability is there for the immediate requirements. Only thing is the coffee growers in Karnataka who have made good fortune this year from coffee and cocoa, and they are cash rich, so they are trying to hold back pepper and influencing others, sending out messages every day to all the producing states. Don't sell your pepper, it will touch 800, 1,000 by December. And farmers were holding back, and now Tamil Nadu farmers are seen since last week on an aggressive mode. And moreover, it is reported in the market that about 8,000 tons of pepper, which was held back by FASI, Food Safety of India, on the exchange platform. They have released good quantity out of that earlier. And this year, it is reported now the pepper stocks which were damaged by the floods in Kerala 12 years back, stocks which were held back are now slowly getting into the market, being a old crop and material not being good. It is available at a discount.
So that's as far as the demand supply dynamics is concerned. Mr. Kuruwa, thank you so much for taking your time out and joining us here on ET Now. So indeed, pepper prices have fallen in the domestic market because of surge in imports from Sri Lanka. But shifting